Welcome to the People, Property, Place podcast with me, your host, Matthew Watts, founder and managing director of Rockborn. This is a podcast where I share the stories, views, opinions and career journeys of the movers, shakers, innovators and leaders in the real estate industry. Welcome to the People, Property, Place podcast. Today we're joined by Ben Segelman, Global Capital Markets Head for Real Estate Solutions at DHL Supply Chain. Here, Ben leads a team tasked with stepping up its acquisition, disposal and development program. DHL hardly needs an introduction. It's the largest operator of logistics space in the world, with a real estate portfolio of 30 million square metres across 220 countries and territories. Previously, Ben was Managing Director at Roundhill Capital, building logistics investment platforms, having started his career as an investment agent. Ben, welcome to the podcast.
Hi, thanks for having me.
Not at all. Well, look, we'll come on to the DHL part of your career a little bit later in our conversation, but a place I always like to start is how did you get into real estate?
So it's a very familiar one. Family links. My father's a surveyor, sort of playing a different side of the business throughout the UK, and I got to the end of my degree, my first degree, which was sort of not something that was perhaps my first choice, but something that I enjoyed. And I just thought, what do I do now? It was a human geography degree at Queen Mary's. And I thought, I need to think about my profession and what to do. And at that point, I had a sort of thoughts on whether or not I wanted to get into investment banking, and then real estate was also up there. I actually went for an interview at Lehman's and I got offered the job. Thankfully, I decided not to take it. I was convinced elsewhere to go and do a master's degree, and I went to Nottingham-Trent, where I also had family who were part of the teaching staff up there. And yeah, that was it. That was my sort of lead into the start of my real estate career.
A brave decision to turn down Lehman's probably at the time and
pile
on more debt, trying to pursue something. Did you have a mentor, or did you take any advice at the time? Or
do you know what I did? I had a few people around me, but I think probably the one that turned me off the most was going into the city, into the Lehman Brothers office at the time in Liverpool Street, and it was just it felt like walking into the Death Star a little bit. Somebody just starting out their career. It was so formal, so regimented in terms of the process that I was going through, and I just thought, what? I don't know. I'm not sure this is what I want to do for the rest of my life. And then I started speaking and said, I had an uncle of mine who was the head lecturer at Nottingham-Trent in real estate, and he was a huge advocate. He said, look, you can spend time out on the road looking at real estate. You're not in the office 24/7. You're out and experiencing and working with great people, like-minded people. And I gave it a go.
I guess you could always dial it up and go down the real estate banking side later if you wanted to.
Exactly.
Right? So
that was it. That he sort of mentioned there are so many different sides to this part of the industry, and once you get into it, there's any number of different ways that this could head. You could head back into investment banking in the future if you wanted to.
So you started off as an investment agent. Did you get your letters at the time?
I did with Fletcher King, they were a fantastic bunch, still are. Very small team. And, I had some interesting mentors within the group at the time. It was a period, I think, sort of 2003, prior to the GFC, where there was a bit of a ride in the real estate investment market, and we were pretty successful in that period. Invested in a number of different assets: office, retail, industrial, hospitality, even looked at residential. So it gave me an all sector experience, and I guess I sort of funneled straight into the investment market as well, because it wasn't a rotation there. It was you're an investment agent working within the team almost, I mean, this was kind of before analysts really became a thing within the real estate business. But yeah, I spent a very happy 3 or 4 years there, got my letters, and then decided to move on.
Doing deals, cutting your teeth.
Yeah, I mean, look, I was part of a team, and I was the youngest in the team, but it was, I think you get to that point as a graduate where you go up and take your RICS, and it's very difficult to sort of move on from that within the same company. So I thought, look, I've learned a lot, and actually I can grow more in my career by now making a change and moving forward to something else. And that's when Teesland IOG came along, and I started as a UK acquisitions manager.
Teesland, for people who don't know, and I'll probably include myself in that, that's like the OG, like industrial.
It was
business,
IOG,
right?
yeah. This was 2005. I think it was 2007. They sold to Valad Property Group, and then Valad Property Group then sold to Blackstone, and then Blackstone sold it to Cromwell.
Yeah.
So along those lines. But I joined there, and it was quite an established fund manager, asset manager, and I joined on the UK acquisition trail.
Just logistics.
Just logistics, and they were probably more famed for the light industrial side of the industry. But I did about 4 months of that, and then they said, Ben, we're calling the top of the UK market. We're not going to invest anything else, in the UK market now. I thought, well, crikes, I'm 4 months in. What does that mean? They said, well, that's okay, because we actually really value you. You've been quite successful in your first few months. You bought a real estate asset, which we didn't expect, because you were new and learning your ropes here. And they said, well, actually, we would quite like you to go out and help our Central European team on the acquisition trail, who had a joint venture at the time with a large investor. And they said, we need to buy more for them. We've got a great management team, but not so much on the acquisition trail. So I then started sort of traveling frequently out to Poland, Czech Republic, having a whale of time. It was still at that period of time, one where in Europe acquisitions were still live, and you could still find value. And we were successful for about another 12 months in that process. And then we hit the GFC, sort of the start of that with Lehman's. I remember actually being in Expo that year with the group. Valad had just bought Teesland IOG, and this all sort of collapsed around us. And again, with the same company, now under a different name, I thought, oh, what do I do now? But thankfully, I got on quite well with the management team there, and I was held in quite high regard. And they said, well, look, we'd like you to come back from Poland. We're not going to be buying now, but perhaps you can help us on the asset management charge. We like how you've thought about the assets we're buying into and the business plans you've been formulating. You obviously know how to work a real estate asset. And so I went back into the UK side of the business, and actually, picked up quite a sizable part of the UK portfolio, mostly in the sort of southwest and Wales. And just actually, for what was the start of the GFC at that point, I had a whale of a time. Asset managing large corporates as well as SMEs in a sort of a 1980s light industrial park in the darkest part of Wales, and just met some really interesting characters. But I think more than anything, just evolved my understanding and learning of what the real estate market is all around. The investment market is one side of it, but actually managing your assets and understanding how the income, is such a large part of that investment, and what that means, and how you need to sort of be proactive around that is certainly, it was a great learning curve.
Some people listening to this won't, and I include myself in this again, won't know what the landscape was like pre GFC. Can you just talk to like the logistics? Can you just explain like what was the logistics market there? Because it definitely wasn't the darling child. It was like offices and retail. Yeah. It was kind of like, if you had gout and you're a shed head, it was a different kind of like subsector, right? And it was it almost like ugly duckling of real estate.
It was, and actually when I left Fletcher King before I went to Teesden, I had a few offers to go into other sectors. One of those was retail, one of those was in leisure, and a lot of my friends at the time sort of said, look, this is where you want to be. The yields in leisure and retail, they're pushing 4%. I was like, well, yeah, that's great, but it's kind of having to, with retail, all the complexity around the the ITZAs and the whatever else, you had to learn around it, and it just really wasn't for me. And leisure at the time was a relatively new, I think, sector that was just kind of coming up and was very attractive. But again, I think I had an affinity with the light industrial and logistics side of things. But it was really seen as the ugly duckling of the real estate side of things. And, look, the yields reflected that. It was sort of 6, 7, even 8% territory. And
you're having to trek through these parks in outer Wales, or just gloomy times.
Oh, there certainly wasn't the institutional quality that we have today. It was a much grayer scene, and I think also that there wasn't the same kind of professionalism around the data that there was within the other sectors as well. It was much harder to actually get quality information around the sort of subsectors, sub-locations that you were looking into. So it was a tough choice, but I think it just had something that the other sectors didn't. Some of that was also the people. I think I enjoyed the discussions with my colleagues in that sector at the time, and it just lured me in.
And so it must have lured you in quite heavily because, schlepping all over the UK, but then going off to Europe and doing something similar when probably most of your mates are, trying to let or sell some prime central London offices or some swanky retail parks. You must have had a real drive to like really embed yourself in that market. Was there something that you thought there's potential in this longer term that's currently being overlooked, or was it the people and path less trodden?
I think it was the people, as well as I think the uncertainty of the time. At the start of the sort of GFC, we started to see a lot of people get made redundant and, sitting there twiddling their thumbs going, well, I'm okay. It's like, you're not going to be okay. You're not going to get carried through this. You're going to have to be proactive. And, I saw certainly the move within Valad at the time to the different sort of seats that they sat me in as just a willingness to want to impress and to progress my own career. And it paid dividends. Those days and weeks that I spent away sitting in Warsaw or in Prague. When I got to sort of 2009, Valad then asked me to consider becoming a fund manager on a large mixed portfolio they were taking off of Kenmore at the time. And I came back then to sit on top of that fund and really enjoyed period of working on that, and that was a reward for all of the hard work that I put in over that time. It wasn't, and I think at the time Central Europe as well, people sort of looked at, as well as the industry I was going into, going, well, why are you doing logistics and light industrial? They sort of said, well, why are you going off to Poland and Czech Republic? It's kind of the Wild West. But actually, I think it was really exciting because it was at the start of its sort of modernization into these amazing cities and locations that they've become today.
So you got offered the opportunity to become a fund manager on a multi-sector portfolio. Was that a challenge moving away from just logistics into having a multitude of different asset classes that you had to kind of learn and get under the skin of, or was it relatively straightforward? Because I definitely know they do talk about if you're like a retail fund manager or an asset manager, shopping centres, arguably it's like the most complicated asset class. It's much easier when it's just logistics. But going the other way, was that a challenge or not really?
Well, I'd done some of those assets when I was at Fletcher King, so I knew the sort of bare bones as to what we were looking at and working with. But I think the exciting thing about that portfolio was very value add. So if you had a real estate sort of mind and you were able to sort of conceptualize how you could improve these assets, how you could invest capex into them or use the funding to help sort of boost the returns that these could deliver, then it actually wasn't too much of a step up. Rather, it was an exciting sort of challenge to really get to grips with these assets, and then also work with the local teams that we had around Europe, in Germany, France, where else were we? Netherlands, to really get underneath the skin of these assets to create these business plans that then created the value.
Was it a challenging time at the GFC? It was this post GFC to kind of manage the drop in value, and can you just talk to me about that situation and the kind of the mindset maybe you had to adopt during that period too?
Yeah, it was. I think the main part of that period that I recall was trying to sustain income rather than generate new income, because there just wasn't the demand, and so focusing more on the customers, the tenants, and how they were faring through that period themselves, understanding their issues, trying to help them with those issues, but then also remembering that this is a commercial venture and we need to still create that and maintain that revenue. So it was an interesting period. It was tough, really tough. There were a lot of tenant failures. There were a few successes, but it wasn't really until sort of 2 to 3 years post the GFC that you started to see the sort of the success of all that hard work really come through. But it certainly wasn't the sort of headier days of 2004, 5, and 6 that just before it. But it sounds not too dissimilar to probably where we are today. But
talk to me about the move to Ashmore and the kind of the global role and remit, and that step up again from the UK to Europe to take on a global role. How did that come around, and what was the kicker for you taking that opportunity?
I think there was still a lot of concern. I think that was around 2010 when I made that move. There was a lot of concern around the state of the real estate market in UK and Europe. It was still relatively flat, and I was approached for the role in Ashmore, and I could see that the markets in the emerging markets where they focused was a much more active location, especially from an acquisition point of view, which was where I wanted to return to. So I started out my career as acquisitions. I then went into asset management, then to fund management, and I always felt that I felt most comfortable, most at home in that acquisition sort of role. And this had a lot of adventure. It had at the time, the opportunity to go out to Russia, to India, to China, to South America, to Africa, and I was on a plane a lot. And we were a team of two within a large organization, which was not real estate focused, but we came up with a lot of opportunities. But it's actually something that I've realized sort of post taking that position, that you've got to be certain that the strategy fits within the greater organization, because this was a case of the idea sounded great, but actually when I sat in there, I sort of realized almost straight away that this was going to be hard work.
Because it sounded like a romantic idea, so we'll get someone in to kind of run it, but in reality it was a challenge, or there wasn't as much backing or commitment to actually follow through with it as maybe initially said.
They weren't a real estate investor. Real estate was an idea, a concept that they liked and they wanted to explore. And we certainly went out there and explored. The amount of traveling that I did was huge, and I met some fantastic people in all sorts of different markets. And I guess also, I looked at transactions in a completely different way than I had in the past. This move from buying real estate to looking at M&A opportunities to looking at joint ventures, with a whole range of different sectors and businesses globally. So the experience was huge, but the actual hit rate, success rate in terms of what we're doing, it was pretty low. And from a career perspective, also from a family perspective, I just actually had my first child whilst I'd worked there, and my wife was sort of saying, look, you're coming back jet lagged, and then you're flying off again. So, we need to consider where your priorities are. And, I agreed. And, I think it was also the one thing that dawned on me that it was quite easy to move into the emerging market sort of world and from, a very comfortable base of within the UK and within Europe, which is obviously closer to home. But once you move out into the emerging markets, coming back in is often quite difficult, because people sort of say, well, what experience can you bring recently that, somebody else might be able to, who's been sat doing something in the UK and Europe. So it was a challenge to move away from it once I'd jumped in.
And is that just the lack of sophistication there as well, or just the network, or the amount of players playing in the emerging market, or was it just the relevance and connections and
I think
finger on the pulse in terms of what's going on?
Yeah, so I think, with any industry, once you move away from the locality for any period of time, there's a question mark as to how relevant you are when you come back to it. Have you still got those close connections, that close network that you used to have? And of course it was there, but it was instilling that belief into, the next career progression that, was a struggle.
Well, Michael Bickford must have come knocking in 2014, and I guess sit down with your wife. That's, realigned your priorities, and the fact you've got a son. How did that come around, and what was the kind of rationale behind joining Roundhill?
So Roundhill came along sort of fortuitously. I had a call, and I went straight in to meet with Paul Bashir, who was the COO at the time, and we got on very well. A lot of the processes that I had been looking at when I was with Ashmore in terms of the M&A activity, the use of real estate debt within some of the vehicles that we had, some of the asset management that I was doing for Ashmore at the time, as well as the joint ventures, were all the same structures, the same strategies that Roundhill had, and they were going through a sort of growth period at the time, and they were looking for a head of asset management. And I sort of raised the hand and said, look, I've had so much experience in different parts of this industry in all sorts of different sectors, and Roundhill was very much a multi-sector group at the time. They had a large commercial portfolio, residential, growing student portfolio, and it clicked, and I came in, and it was great. I mean, they had such a huge pool of talent there, really young team of fantastic sort of post-MBA graduates and analysts, and you could see the sort of ideas flowing, and it was an exciting place to be. But again, sort of this was one of those where I walked in through the door and immediately, we're selling our residential business, we're selling our student housing business. And I sort of sat there.
I guess it was Nido at the time, wasn't it?
Nido.
So
exactly.
We're getting rid of that.
Yeah. And they just then sold the German residential business as well. And look, Michael Bickford and the Roundhill team, they were never one to sit idly. They'd sell something if the opportunity was right, and they'd take the returns that generated. But then, of course, they were thinking about the next strategy. What do we do now? And at that sort of time, I also said, well, look, I've got a background in this logistics, light industrial, and I think there's a pricing disconnect here that not many have actually woken up to yet. And I think we need to start to explore this. And they agreed, and I went out into the market and managed to find a quite substantial Nordics platform that we started working on. And it took a while, about 18 months to take it down. It was a Norwegian listed industrial platform in Norway, Sweden, Finland, and Denmark. And, it had all the relevant kind of structure to set up and start a platform that we could grow and expand, except it had 400 shareholders, all sort of non-institutional investors that we had to convince to sell. And we were convincing them to sell it at a very good price.
For you.
Yes, for
not
us.
for them.
Exactly. And, it came good. We bought it. We had a fantastic investor alongside us, Stepstone, whom, I learned a huge amount off of. And then we started to build a team.
Before we come on to the team build part, I'm really interested just to find, do you find the deal first, or do you find the capital first when you're launching a new strategy? What was your rationale, and how did you go about that?
So the way Roundhill worked, or at least the way we were looking for opportunities at the time, and how we built that strategy was very much around the product. Well, firstly, the thesis on, as I mentioned, the pricing disconnect. How does this sit within the market relative to where pricing should be and relative to potential of this sector? And, we identified logistics, light industrial, as somewhere that was interesting. What can we find that actually makes sense, and we can then go out to sell to a partner to finance this alongside us. And at the time, there were lots of ideas. There weren't as many actors in the market looking for that light industrial logistics. This platform came along, and then we said, okay, right, well, let's create the business plan around the platform, and then let's sell that business plan to an investment partner. And we did. It took a while. This was a new sector for Roundhill. They'd done commercial, some industrial in the past, but very small sort of lot sizes. But this was big, and there was a whole process around not only making the partner comfortable on the real estate assets, but also on our ability as a manager and a partner to take in this new geography. Roundhill hadn't yet been to the Nordics. They hadn't yet invested in this type of scale in this sector. And this was something, we spent a lot of time selling, a lot of time refining as well. Every investor that we spoke to actually came back with feedback that then we took on board. And, eventually we found Stepstone, who believed in us, believed in the sector, believed in the opportunity set. And, we went off and we went racing with it. And, it had its struggles. At the time, financing was incredibly difficult to arrange in Europe in general. Up in the Nordics, it was almost impossible. Complete opposite to the kind of situation they're in today up in the Nordics. But we had to, really search for a bank that would come alongside us on that portfolio. But we prevailed. We had to pay for it as well. But actually, as the hard work, the asset management that we started to do on this portfolio started to roll through, it all started to get a lot cheaper. It all started to make sense. And actually, you could see the performance as we spent time on this and started investing in it. And that was the catalyst then for the further growth of our logistics exposure at Roundhill. It was probably sort of 2 years into my tenure there that then we started looking down into Southern Europe in logistics. Michael had an ex-partner who was in Italy, who sort of, had found some logistics potential in Italy. We also had some other colleagues in Spain sort of saying, look, down here there's some real value, and we started building then the same kind of business plan, the same kind of approach to build the story, show the value, and take that to investors. And we almost had an initial immediate yes from KKR, and that was the next part of our logistics growth, which was a joint venture with them in Italy and in Spain, again, not straightforward, lots of work to get it to a point, and very much the same experience that we had with the Nordics. First of all, convincing them of the locations, convincing them of the opportunity set, and then also convincing them about us and our ability to manage this and to perform. And then also, having to go out and arrange the debt and do all of that again. But it was great fun, and we built up quite a sizable AUM and a great team as well. We had some fantastic asset managers that we hired locally, also some great team members that we brought into London. And it was a great sort of 4 or 5 years of work, a lot of hard work. But look, Roundhill was a dedicated residential and student investment manager. Logistics was always going to be this piece on the side. And I sort of got to a point of time with them where I said, okay, look, I've helped you do this. You've now got some great people. I need to spend a bit of time away and think about what's next.
And at the time, I guess it's typical, 3-5 year business plan with KKR and Stepstone.
Yeah.
So you're buying this kit,
mm-hmm.
hoping the timing would stack,
yeah.
Do your asset management turnaround and then dispose of it and give a return. You left in July 19, I guess, after some period of reflection, and you joined DHL. How did that come around? And why DHL? Was that one of the top picks? Was that, where did that rank? Because I guess in 2019, you're probably seeing the emergence of some of the single track, very well capitalized businesses set up, and logistics certainly roaring. It was probably far from the ugly duckling, as they said, and it was on the rise and definitely more institutional grade. How and why did DHL come around, and why did you want to go and join that business?
Well, I was talking to DHL for a fair period of time, probably 6 months, 7 months. And they were sort of explaining to me what they were doing. They'd just in 2018, they'd launched and sold, albeit in different sort of periods of time, a global portfolio. And, I could see that they were doing this really without a capital markets investment person on board with them. Instead, they were sort of relying on the advice of the agents they were working with. And, it was very much trial and error. And, I was sort of thinking to myself, I can carry on very much in the same vein with Roundhill and either continue with them and push the logistics, see how far we can take this, or even go to another group and or do something else in the private equity style and hopefully make that a similar success. But then also I thought, look, I've got this group knocking at the door and I'm having a really great discussion with them, and they are the world's largest 3PL. They are the beast. This is the pinnacle of the logistics sector. And the opportunity also sort of started to look quite attractive as well, on the basis that they said, look, you're coming in, you're going to sit alongside the country heads as their partner, as their sort of advisor on the capital markets to help them think about their strategies and how to deploy their capital, and also be active within the markets. And you can be a real leader in this part of the business. And it was a very long thought process. This was coming out of private equity, going into a very bureaucratic Germanic machine that
is mainly an occupier, right?
Oh, absolutely, yeah. It's it's a logistics business, and real estate is this little bit on the side again,
And you've been not burnt, but you've kind of been there before, right?
Exactly. And there was a big contemplation and lots of discussion. And this time around, learning from that experience that I had when I was at Ashmore, thinking, this big beast of an investment manager in the emerging markets, isn't this fun? This time it was very much more of a controlled discussion. That's why it took so long. It was actually probably about 12 months by the time I actually got round to joining and being comfortable. But I could see that the individuals that were involved in real estate solutions at DHL, which is where I am now, that not only were they well respected within the group, but they also helped the group sort of form its direction and its strategy as they looked into future years. And I thought, actually, to be part of that group, to be part of something so large and help define their future and them rely on this, just seemed incredibly exciting.
So can you just talk to me about real estate solutions as a vertical and how it's set up and the capital and what it is you do exactly?
Yeah, so it was formally set up in 2016, and it was a sort of continuation of, I guess, a less regimented process that DPDHL was doing from time to time. In 2004, they'd bought Excel, which was a large US-based logistics group. And Excel had, for a period of time, been building its own assets for its own occupation and then selling those back into the real estate market on a sale and lease back, and he'd been doing that quite profitably. But I think DPDHL is a new owner of that business and of the owner of DHL Supply Chain, which is one of the platforms it is the platform that I work within. They decided that we should do this formally and we should set a number of parameters around how we invest in it, what it means, and how to really make this work as an investment strategy. And in 2016, it started off with a relatively modest access to its balance sheet of probably only 50 million euros. Today, we've got access to a much larger portion of the balance sheet, best part of $1 billion, which we invest in developing real estate for our business or for our customers. And the premise here is that, being able to define your own destiny as to where you want to be located, as into the type of real estate that we as an occupier believe is the most suitable for our needs, but also for the industry as a whole. For such a long period of time, 3PLs and other logistics occupiers have been told by developers, this is what you put yourself into and this is why you need to be located here. Yeah. We're a business now at DPDHL with some 500,000 employees globally. We're in over 200 countries globally. And as a business, we think we know quite a bit about where we want to be and why we want to be there. And so Res Real Estate Solutions, we took that knowledge, that data, and then said, okay, fine, well, these are the locations we want to be in. This is why we want to be here, either for labor needs or for transportation needs. And we've just continued to build upon that strategy, and investors have been very willing to buy into it. We've been more than willing to build it. We have new business, we've got existing business. We're, as you mentioned earlier, DHL Supply Chain is operational in almost some 30 million square feet globally. And, a lot of that is quite old, inefficient space. And we've got to think about improving that for our customers. We've got a ESG agenda like most, but ours is very much driven towards now everything that we build being carbon neutral, because our customers are demanding that. And equally, I think we're also building into new markets, locations where DHL hasn't yet got a footprint for the supply chain. We're looking at some interesting locations in the Middle East, as we're looking in India, we're looking in South America and China and beyond. And it's always something different every day. And I think this goes back also to part of the excitement of this job that I'm in, is that the business is so large, the desire to grow and meet the demands of its customers is so significant that no day is pretty much the same with everything we do. But we've got a pretty good track record now. We've built more than 150 assets globally in over 24 countries, and it's still going strong.
Wow, I mean, that's amazing, but there's also an awful lot in there. Typically, can you just talk to me about, and maybe the people listening, occupiers don't normally like to take risk or tie up capital in real estate, right? Because it's not their primary business. Why does it make sense for DHL to do that? Or at what stage did it make sense for DHL to do that? Was it wanting to capture some of the upside, limit exposure from rent increases? Is it Yeah, what is it and why?
I mean, look, there's a number of reasons, and the one thing I sort of say to that first of all is that it's not that unusual that occupiers also want to develop or own their real estate. In fact, a lot of them do, because land is a very scarce commodity, and being in the right location, having the right real estate is a very valuable asset to have on your balance sheet. And look, a lot of our competitors, even other sort of parts of our business, develop their assets and they hold those on their balance sheet. It was just felt that for DHL Supply Chain, that actually if there's a gain we can make out of being active in the development world as well from a real estate perspective, then we should consider that. It also, I think, helps us to the pure scale of what we do. It's just for us to hold that on balance sheet would tie up such a huge amount of capital. As I mentioned, 150 projects that we've done to date since 2016. It's a lot. These boxes aren't cheap. So participating in the capital markets is a way of making this accretive to the business. But look, we do this in a way that also is very market facing. We mark to market on our leases, on our rents, on the tenant incentives that we take when we draw a lease, because we know that the investment market won't pay for an over-rented asset, at the same kind of level. So, it is a very profitable business to be in, but it's one where also you need to respect the institutional nature of the markets that you operate in as well. And yeah.
Talk to me about timing, because obviously we spoke about when you were around till 3-5 year business plan to kind of in and out, having fixed up the asset. Obviously you've spoken about third party capital coming in to work. Can you take a slightly longer term view, and can you ride out some of the dips just given the scale of DHL and the ambitions that you have, or does it present other challenges as well?
Yeah, I mean, look, we've got a finite access to the balance sheet. We don't have an open checkbook that just keeps going. So we do have to transact. But I mean, look, we're obviously well placed versus a lot of our counterparts in this particular cycle. We don't develop speculatively. We develop with our business wanting to take the space.
Interesting.
So, there's always a tenant, an income profile with that investment, which obviously is attractive to investors. I mean, obviously the big dilemma at the moment is where that pricing is and what that means relative to, all of the turmoil we've just experienced over the last sort of 6-9 months, with cost of construction going up as much as it has, as interest rates now coming in and actually being a significant part of the real estate equation again. But, look, it's a cycle. We expect this to change and for investors to adapt, and I'm pretty sure that within a period of time it'll be back to normal again, and we'll see transactions moving at the same kind of pace they were 12-18 months ago.
You talked about data earlier in our conversation. I guess DHL as a business is probably the gatekeeper, has got the best access to data. How important is that data, and also data informing your decision-making process and investment process compared to maybe 5, 10, 15 years ago? Like, where does it fit in terms of your ranking?
Absolutely huge. I mean, the data we have access to with the operational business, and the data that we can translate into something meaningful from a real estate investment, it's just so huge. We've actually just gone on quite a considerable recruitment drive, bringing in new data analysts who are just exceptional people with fantastic ideas and abilities that are making me look very old. But it's just, we don't underestimate it. But at the same time, we're still sort of working through it all, because there's just so much of it, and time is limited in terms of how much you can achieve at any one moment. But and perhaps, putting that as an example, at the moment, data of, for example, where labour is. Labour at the moment, from a operational perspective, is in a huge demand, and there's a huge shortage of it. How do we ensure that the next plot of land that we buy is in a location where there's going to be sufficient labour to actually resource the operation? And when you think about it, like DHL, we have, as I mentioned, a staff of some 500,000, which means that we also have a lot of data on where people live, where they work, and also a lot of CVs coming in through the door. So you can look at that and say, well, actually, which locations receive the most inflow of, but how do we get access to this, because we're such a big machine? So it takes time to digest it all and to put it through the machine, but it's transformative in terms of some of the decisions we're making, and I think in the future it's only going to get more so as well.
I bet also you get ahead of others just in terms of the bidding process, just because of the weight and the opportunity and the infrastructure and maybe employment that you can bring to a particular section or part of a country as well.
Yeah,
right?
It's one of the benefits. I mean, it's it's not always apparent, but there are the situations where a municipality wants to increase employment, and of course, if we can turn up as a developer, but with the acknowledgement that we're going to have 100 local jobs as well, then we're going to get moved quite close to the front of that queue.
It's almost a perfect storm at the moment, whether that's Ukraine, digitalization, artificial intelligence, security, inflation, interest rates we spoke about at the moment. How do you see the market, and where do you see the opportunity from a global perspective at the moment? Can you share any further light on that? Or
yeah, look, it's turbulent, and every other week at the moment, we kind of feel that perhaps we're coming out of this. Perhaps there's a light. I was at MIPIM a few weeks ago, and literally on the first day that we got there, the Silicon Valley Bank, and then Credit Suisse, and it just almost seems like one thing after the other at the moment. But I think the important thing to recognize, and for a lot of people who've not been through these cycles, is that it is a cycle. The market still has a huge amount of capital and interest in real estate in general, not just logistics. There's a lot of negativity around the office markets and retail still, but industries adapt, and real estate investors adapt, and markets adapt, and we will come through this. And it will require a new pricing, a new return structure for investors to have to sort of understand. But it'll be one of these situations in 12, 18 months. We'll look back at this and not laugh, but we'll look back at this and think with fond memories of, perhaps how quiet it was, because, how busy we'll be in 18 months as it all picks up traction again.
You've clearly reinvented or pushed the boundaries or seeked out new markets. What advice would you give to someone who is either early on in their career, who's got ambitions to kind of really progress? What advice would you give someone who is thinking about maybe that next career move, or if they should take a role or push themselves out there?
Research it, first of all. Make sure you do a thorough due diligence on what the opportunity is, because as I mentioned, part of my career, there were parts where I thought, like, this sounded too good to be true, and then when I got there, it really was. And perhaps there was an element of just blind ambition that drove me towards that. But do your research. But then also, the other thing I'd say is don't be afraid to open the door to new opportunities, because there's so much potential that can be driven out of one opportunity, and how that can lead into the next part of your story. That it's sort of, when I was working my way in Valad, all the different directions that they pointed me, the trust that created, the friendships that I was lucky to have in that business, and then the career sort of growth that gave me as well. If I'd have said no at the very start when they said, look, we've called time on the market in the UK, and I said, well, okay, I'm going to go find something else, I might have found myself in a much worse position than I was. But yeah, just keep an open mind.
In terms of looking ahead, what do the next 12 months look like for you and the business at DHL?
Exciting. I mean, we've got a lot of opportunity. We're riding this wave of the market to try and think about how best to participate in it. And you know, it's not clear at the moment how it's going to work its way through. But you know, look, it's April. We're very early on in the year, and I'm always sort of glass half full, optimistic that we will find a way through. We've got a fantastic group of people. We really have at DHL and within Real Estate Solutions. It really feels like a sort of close-knit family almost. And I think, you know, we're all driving each other forward to find our way through this as a team. And I think that's the exciting thing, to be able to come out of this at the end of the year and have success is what we're all aiming for.
As we draw to a close, Ben, a question that I ask everyone who comes on the podcast is, if you were given £500 million of equity, who are the people, what property, and which place would you look to deploy that capital? And yes, you can have your team. Absolutely. Maybe other people or people you've worked with throughout your career or you've been envious of their ability.
Do you know what? That is such a huge question. But there's so many markets where they haven't yet had the same growth curve, the same modernization that we've experienced in more of the sort of Western world. And, you know, look, we're excited at Real Estate Solutions and at DHL about our growth potential in areas such as India, down in the Middle East, even South America, in various locations. And, you know, there's a great story, not only for what we can do from an investment perspective, but for the value it adds to the people in those locations, so such as the employment, such as the improvement in working conditions and the lives of the individuals who can end up working with DHL in these locations. You know, it's more than just the building we build, but it's the opportunity we give to the people who work with us. So location-wise, India, South America, Middle East, in terms of where you look to deploy that capital. Yeah, and I'm assuming in the light industrial or logistics market, you'd look to to work there. Yeah. And are there any people in your career that you would love to kind of bring on that journey in terms of deploying that capital? Or right, look, there's been so many. You know, a lot of the team at Roundhill, I still got fond friendships with, and you know, some of them have gone on to great careers themselves, and equally the guys at Ballad, you know, have now gone on to create fantastic venture in Arrow and are doing great business everywhere. But yeah, too many names to mention. Awesome. Well, look, Ben, thank you so much for joining me on the podcast today. I've loved hearing a little bit more about your background story and views on the market. So thank you. Thank you. Cheers. Thanks for listening to this episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague, subscribe, give us a rating, like or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of which guests you think we should get on the podcast or areas of the market that we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit experienced talent for real estate private equity firms, investment managers, REITs, property companies and advisory firms across the investment, asset management, development, fund management, ESG, cap markets, investor relations and general practice space. So if you're considering your career options at the moment or looking to attract top talent to come and work for you, head over to the website www.rockborn.com where you can find a wealth of resource to aid your search. Have a great day wherever you are, and I look forward to catching you next time.